Hello traders, everyone. Welcome to our new webinar. It's March 17th, so hope you had a wonderful weekend. Just let me know if everything is fine. Can you hear my voice well? And also if the screen is okay. So, as you know, we got still a pretty interesting price action. Firstly, we have seen, as you know, last week a sharp decline on stocks, but this stock market can be now stabilizing a bit, and possibly that's also due to the fact that we got CPI print last week lower than expected. Basically, it was softened more down to 2.8%, and of course, market could position themselves for potential rebound because we have Fed this week, and potential dovish remarks obviously could cause this stock market to bounce at least in 3 waves to recover. And so far we have some very nice price action, which I think could cause even more dollar weakness, and as you know, dollar is in a very strong decline, and in my opinion this weakness will resume. Now, not only the Fed, we have also BOG, Swiss National Bank as well. I think it's on Thursday, as well as UK bank rate decision too. So the FX market will be very volatile, but for us, for overall or general look, of course, the main focus will be on the Fed. Now, before we go to some of other charts, I want to start with the 10-year US notes. They are still recovering quite nicely while the US yields are coming down, and obviously I'm still thinking that there's room for more upside here. We can see some corrective price action, especially if you go here on a smaller time frame. You can basically see that we have some 3-wave decline from the high. So it means that if we get a rebound, if Powell would really be dovish, if the US yields will come to the downside, of course we can expect that US dollar will drop further. But what's the most important is still differential between German and the US yields, and we can see that euro dollar is pulling back a little bit, and that's because German yields are slowing down a bit while US yields are still somehow stable here. So in my opinion, this represents some correction within broader uptrend on the euro dollar. And before we go to the euro dollar, maybe looking at the bunds here, which are still expected to break out this October 2023 lows. So this makes me think that this rate differential could stay in place until we see this this move happening to the downside here. So in other words, it means that euro dollar could have a bit of more upside. Now, when it comes to the Elliott wave principle, and based on the current price action, I just think that we have some very beautiful patterns which are very easily to be identified, and these are the patterns that you want to pay a lot of attention. You don't want to spend too much time with the wave structure and price action where market is not very clear, or where you have a different wave count or possibilities. Okay, so whenever it comes to potential clear analysis, well, from that clear analysis and clear perspective, you can potentially build a trade plan. So when looking at the euro dollar, I definitely think that there is room to catch some upside here on dips. What we are looking at right now is that market is in consolidation. Notice that this move to the downside came from that level at 109.40, which was actually the Trump level back in November when he won the US election. So possibly we are now going to see this corrective wave 4. Now some would say maybe that wave 4 has already finished here, but if I want to look for potential trade setups, I definitely want to see wave 4 a bit deeper, at least the 23.6% of a wave 3, but ideally even 38.2%. okay, so these levels weren't meet yet, so it means that we still should be a little bit more patient here. Also, I will observe the pullbacks, the length of the pullback, and will compare it to the previous wave to the same degree. And you can see that this comes in also around 107.67. So I think that this is quite attractive, interesting level. If obviously we get this level, I may look for potential opportunities on the long side. The question is, what can cause this potential dip? Well, who knows, maybe Trump, who already said that he will deliver some new tariffs for Europe, and obviously this could shake the market, the European markets a little bit, and I would not be surprised if we see this drop then into wave 4. That would be the ideal scenario, and then potentially in the second half of the week we see further upside when we will have Fed and Powell press conference. Okay, so overall euro dollar is definitely an uptrend, and I will observe these levels for potential entries if we see a pullback. I don't want to chase the market up here. I just realized that even if we print slightly a new highs, we still can see some deeper pullback in wave 4. So no matter how I look at it, I just think that it's much better and more appropriate for me to wait on a pullbacks rather than looking for some entries up here. Okay, now looking at dollar index, as you know, we got a very nice reversal since January. We compared this year's price action with the one from 2016 to 2017, when we also have seen this reversal when Trump took office. And obviously if we are here in this downtrend, I think that this downtrend has plenty of room, because we know that if that's wave C is a motive wave, and whenever you see a free wave rise completed, the minimum expectations suggest that this corrective rise should be fully retraced. So at least a drop towards 99.50 is something that I would expect. Okay, but obviously the ideal targets for wave C are even lower. So for now, I just think that we are in a pretty good shape here to see more weakness. So I think that there will be opportunities to look for dollar, for more dollar shorts, but not only versus euro. I just see that commodity currencies are also now picking up, and I think that commodity currencies would be much more attractive and interesting when we will see the risk on coming back. Okay, we'll see if maybe Fed can trigger these potential risk on moves, but that's definitely something that we should keep an eye on, because commodity currencies are much more linked to stocks than, for example, euro or pound. Now looking at pound here, it's definitely bullish, but it's slow up here. I'm not really sure if wave 4 is already done. I would still be aware of potential deeper pullback here. Last week they were disappointing from UK GDP figures. Came below expectations, and we have Bank of England rate decision this Thursday, so they can sound dovish, and maybe we will get this deeper pullback. And again, I would not be chasing here. Also, if you look at some pound crosses like pound versus Kiwi or versus Aussie, you will see a very strong bearish reversals there. Okay, and weakness on those pairs normally are very good and could potentially signal for more weakness if we will see some risk on moves. Okay, so rather than looking maybe at some opportunities here on cable, if suddenly the Bank of England would really be dovish, I just think that there are much better opportunities will be visible on different pound crosses. But when looking and comparing cable with the US dollar, of course, this is pretty nice support for the dip around 1.28 level. Looking at dollar yen, as you know, BOG is on the schedule this week, and what we have seen so far from the most recent lows here in March, that basically we have ongoing corrective movement. Okay, so I just think that there is still a chance that dollar yen will see more weakness. In fact, BOG has a slightly rising inflation, and there can be some expectations for potential rate hike still this year. So if they will sound hawkish, I think that the Japanese yen still could see a turn to the upside. In other words, dollar yen can fall much further, especially if we consider that Fed could be on the other side of this interest rates policy. So regarding dollar yen, I think that some very nice resistance levels that we should watch is definitely around 150 level. It's a round figure. We had a pretty overlapping price action around that levels before, so possibly that's going to be a new resistance if we get a bit more upside here. Now, I mentioned earlier that commodity currencies are picking up a bit, and if we compare the price action, here I have a different percentages, different pairs, comparing them since March 04, and that's basically when dollar index started to breaking lower through this 106 support. Okay, so I want to see how the currencies are performing since this strong move to the downside on dollar occurred, and so far what we can see that obviously euro dollar has been firstly one of the strongest week back or so, but now even some commodity currencies are trying to join this trend. So we can see Mexican peso doing pretty well here, making a very nice comeback. By the way, we discussed about dollar Mexican peso a lot, and even in our end of the year video outlook for 2024, we mentioned that Mexican peso will likely see a very strong reversal, and so far we can see that it's even performing very strong euro that was doing quite well, and we can see that Kiwi is also not that far behind. On the downside, you can see that Canadian dollar is very weak, so if I will have to short any of commodity currencies, if suddenly let's say that I'm wrong and dollar will see a strong recovery, then maybe watch dollar CAD. Okay, but for now I want to focus on Mexican peso versus US dollar. You can see that we are now in pretty nice and strong reversal. Basically we are coming out of this wedge pattern, possibly even known as an ending diagonal, because you can see that this can have a 7 swing move here from April of 2024, and what we are seeing now is a pretty classic example. Whenever we have a slow rise in this wedge pattern, the break to the downside or reversal can be much stronger, and usually can take us back to the starting point of this pattern. So I would not be surprised if we see drop towards 19 area, maybe even 18.60 would be much more appropriate based on this theory, when you see a completed wedge and the full wedge should be retraced. But if you take a look here, what I've been referring to is obviously 2016-2017 example. We know what was Trump policy back then regarding Mexico and borders, and we have seen despite very strong drop on Mexican peso, we have seen a pretty sharp reversal later on, starting exactly in January, okay, January 16, when Trump took office. So now basically we have a very similar example here, and I think that there is plenty of room for this pullback to continue. And even if you look maybe here, to zoom this in, you can be in a wave C, maybe even in a wave 3 of an impulsive sell-off. But in either case, drop from 21 should be structured by 5 subwaves. And if you look closely here on the intraday chart, well, basically we are not seeing 5 waves down yet. So I think that there is going to be more weakness. That was wave 1, wave 2, wave 3. Now the extended one is in progress. So after some rally and stabilization, I think that there is room for more weakness while the market is trading beneath 20.18. And I've been even noted on Twitter that that 20 is a very important level, and since we broke through it, you can see that pretty sharp move occurred and very strong bearish momentum that could keep through that level, that could keep pair in downtrend, in my opinion. Now also Kiwi is moving pretty aggressively, and I want to look at Aussie versus Kiwi because I've been shorting this one months back, And the idea behind this one was that this was a wedge pattern we have seen and potential ending diagonal, and after this corrective rise, obviously I assume that market will continue to the downside. Back then the plan was that Bank of New Zealand will be much more hawkish compared to RBA, and so far we can see that Kiwi is doing pretty well. Aussie is lagging behind, and possibly that's because, as you know, China tariffs by the US, so maybe that's why the Aussie is lagging a bit. And so far what I see is that we are breaking this lower trendline support, and I think that there is a plenty of room for more weakness, and definitely in the short term I'm expecting that price will drop below this December 2024 level, and then we will see if we can have any kind of a bounce, or maybe if I should exit the positions here. Now let's take a look also on crude oil. Crude oil did not move much recently, but we are seeing that of course everyone is now trying to turn bearish on energy prices, and we've been warning this potential reversal always when market has seen a pretty strong rebound towards the upper side of the range. I said that most likely we are just in a consolidation, then that this year we should break below that $60 per barrel support. So I still think that that's possible, but based on the sentiment that I'm seeing down here, maybe there is going to be some rally. Okay, we cannot rule out the potential wave E that can still show up if we consider that this can be a triangle in A, B, C, D, E. Then obviously wave E can still occur, and then you will see 74, 75 to be a perfect resistance for a next sell-off. If suddenly, let's say that market will lose the support from here this week, if negotiation between Russia and Ukraine and US will really be successful and war comes to an end, then you will see a very strong drop most likely here. And in such case, of course, I have another wave count here, which even shows that potential ending diagonal here is also valid towards $60 per barrel, which could basically then be a support rather than important breakdown point. Okay, but in either case, if you see some rally on energy prices, if negotiations won't be successful, I still think that sooner or later prices will come to the downside, and we know that Trump administration been fighting higher energy prices quite successfully. So I still think that this will be the case whenever we see some bounce here. Now looking at gold, as you know, I've been talking about gold and silver last time, okay? And last time what we've been discussing is, okay, I said that even if we are here in a wave 4, okay, in a higher degree consolidation, and that we will see only a wave B rally, there's still room for some upside, because back then we identified this retracement as a correction. So regardless of the wave count on a bigger picture, we saw the opportunity to the upside. So based on past price action, we saw very nice, beautiful price action, which give us an idea that market should move to the upside, either for a wave B or possibly even for a wave 3. It doesn't really matter what's the correct wave count. In a higher degree time frame charts, whenever you have multiple wave counts and showing the both direction, because at the end of the day we are still looking for potential trade setups, and even if we have different wave counts but both showing you the same direction, well, this can increase your odds. Okay, and basically so far we have seen a pretty nice and strong push to the upside, and back then, as you know, I said that we will try to figure the right look and the right wave count whenever we have this third leg to the upside. And what's happening so far is that market not only that retested the highs, it moved quite aggressively to a new highs towards 3000 level and made a weekly daily close around that figure. So looks like that bulls are really stable here, and I definitely adjusted the wave count, and I think that this wave 4 might have ended here, and that we are now in a new 5-wave rise. Okay, so if someone is still long, obviously should be very aggressive on stops here, because you don't want to risk too much. You better want to book in profits here whenever you are seeing prices already breaking to new highs. Now the question is, what is the big picture? Where we go from here? Because we can see that sentiment is still pushing pushing to extremes, so you just have to maybe step back a little bit and try to identify the higher degree patterns. And here basically we are positioned at very late stages of this wave 5 of an extended wave 3. So I see some resistance around 3050, 3100 possibly, but the idea is that you are in the late stages of this extended wave 3. Okay, maybe only, let's say, of late stages of this red wave cycle. Okay, but still you should be aware of potential pullbacks in the next few weeks rather than be surprised. Okay, because markets will not just move straight to the upside in one directions, but opportunities certainly will occur whenever there are pullbacks. So if you miss the trend, keep in mind that we could be very late in this extended wave 3 and that wave 4 can possibly still show up, in my opinion, this year. We also have some very nice divergence as well here on the RSI, which certainly suggesting which stage we could be currently trading, because divergences will very often show up between wave 3 and wave 5 swing highs. Now looking at silver, this one also we said that could see a move towards $34 after this pullback, and so far we are here, but did not really completed this 5-wave rise yet from 30.80. So even in the short term, I think that there is a chance for another push to the upside, but then maybe we will slow down a bit, especially if stocks would really recover, if there would be a negotiation successful, some news from coming from Ukraine, then maybe there will be less interest into gold, because safe haven would not be needed that much like before. Now looking at German DAX, it's consolidating, it's doing very well compared to the US market. So if the US markets will stabilize, find the support, we can assume that this index will move even higher. So what I'm looking at here is a potential triangle in this fourth wave. It's a running triangle because we have seen here move to a new high. So if we see some dip in the short term, still fine. I think that very nice support could be around 22,500. If we break the lower side of this contracting range, then be aware of potential drop towards 22,000. But still a very nice support, but obviously then with a different wave count. But still we would track corrective ABC drop then from the highs rather than observing the price action in this current triangle. But in both cases, I just think that there is a chance for more upside here on this one. Now the S&P 500. As you know, we have seen, I talked about this in the past, that we got some volumes here. Okay, pretty nice volume occurred in this month in March 11th. It was the second largest volume actually since March of 2023, from 2 years back. Okay, so, and always back then we have seen a pretty nice and strong move to the upside. That's one thing. The next thing is that market has been, as you know, buying a lot of puts recently, and of course now when we are running into expiration of this contract on the ES, I just think that there is basically a chance that market will see some turnaround, because there will be obviously some that are booking profits, there are some that are closing in losses, and there will be new traders that will try to roll over to a new contract, to buy a new contract, because they will anticipate that in the next 3-month period for a new contract, obviously the price will be higher, because we have seen a pretty strong move to the downside. And in Elliott wave terms, I still think that there is a chance that this is a corrective pullback. It can be an expanded flat, but in the short term, I'm not really convinced if this low is already in. I have obviously different interpretations. Could be wave C of a flat, as I said, or possibly wave A of a deeper ABC correction. But notice that now when we are recovering, it can still be wave 4. Okay, so still can see limited upside. Watch this trend line resistance connected from that highs. So it will be important to see what will be the reaction up here. But if you're looking for some intraday setups, keep in mind that this wave 4 should be corrective lag, right? Should be made by 3 waves. And if you look on the smaller time frame, okay, then what's really interesting is that we have this bounce from the most recent lows in impulsive fashion. So looks like that's an impulse. So even if I'm saying that we are going to see only wave 4 rally, okay, there will be room for more upside in the short term. So I want to see how the price will respond today around these resistance levels here. That goes back to last Wednesday, and on dips definitely very attractive support could be at 5,650 for this wave B, or maybe even wave 2, who knows. But in the short term, I just think that this wave 4 rally has room for more, for a bit of more upside. Now, as I said earlier, also I have another wave count, and the second alternate wave count scenario for this could be that we are in a deeper wave 4. So this could be wave A to the downside, but as I said, 5 waves down could still be unfolding, but then maybe we'll get only temporarily for a wave B and then wave C to the downside. But still, we'll be looking this to be a counter-trend movement as part of the higher degree uptrend. So even if we get some just temporary relief rally for wave B, still it's important that we can be approaching some support also based on this seasonality chart. As you know, the second half of March could be quite positive, especially in April, and then stabilization in May. So we have some room based on price and definitely in time for prices to see some rebound. Now, if we take a look some of single stocks, nvidia also had a pretty nice recovery, but I just think that's still just in the middle of a triangle, so don't get too excited about potential break to the upside. We possibly just stabilized at the lower side of this contracting range, and maybe we could see 130 this week, but the overall price structure suggests that even if that's a wave 4, okay, based on time length compared to wave 2 the same degree, and based on this incomplete triangle, I just think that this range will not be broken just yet. Ideally, we will see ABCDE formation, then possibly we'll start breaking higher in maybe late in April or May. So be aware of this choppy price action here until these ABCDE legs are in place. Also, if you look at Microsoft, where it is, Microsoft also came very nicely to the downside to new swing low. Not really completed all of the needed 5 subwaves here for this wave C, but possibly we are approaching these late stages and potential support. So maybe another dip to 360 is possible, but then overall I would just be not be surprised if we see some stabilization down here. Not only that was a swing low, it was also the swing high, the same level here back from July of 2023. So definitely approaching a very nice support levels here, and this, by the way, was quite a deep pullback as well in 20% or so. Now let's take a look also on Google. This one has seen a very strong drop, but notice that if I can count possibly 5 waves down here, okay, it means that we can be approaching some support down here. So we are, wait, what happened? I'm not sure where the labels disappeared. Here they are. Okay, so maybe we are now in late stages of this wave A. So watch out for some support. I would not be surprised to see wave B rally here in the next few weeks. Of course, the much more ideal and better support would be down here, but then maybe after a higher degree ABC correction. But just keep an eye that there can be some stabilization as well here on this one. So maybe the whole stock market with the indexes in the US is coming into some very nice, interesting levels. We still do not have maybe all what we want to see for this risk on to resume. But I would not be surprised if stocks would start looking very nice, in much better shape, maybe after Fed and Powell on Wednesday. Now let's take a look also on cryptocurrencies real quick. Nothing has changed actually since last week when we also looked at some of chain data as well. But looking at Bitcoin futures, we are still holding this channel support. The extreme levels here to the downside have been retested around 77,000. But my concern is that rally is not really significant. You will see on cryptos in general that market will bottom after some very strong movement liquidations that will just cause a very sharp drop and a sharp reversal in time pretty quickly. But this hasn't been the case here. So I'm just wondering if maybe there can be another move to the downside. But when looking at the whole price structure and subwaves from all-time highs, it's very difficult to say that that's a top in place, okay, because you have too many overlaps. So I'm looking at the WXY formation, meaning it's a complex correction. The first support that we identified was touched here around 76, but I'm not really sure if that's all. I definitely have also an eye on potential wedge formation on ending diagonal, where we could see another retest of 73,000 and then maybe potential bounce. Also, if you look closely on this current bounce, it's not really looking impulsive at all, so definitely it's something that you should consider rather than maybe trying to chase the bottom here and look for some trades on the upside, because if you're more like a short-term intraday trader, maybe it's a bit premature to look for potential entries on the long side here. But overall, I would expect that market will stabilize and see some higher degree of recovery, even if just temporary, because we know that some are trading with leverage on the short side, trying to benefit from falling prices. And even those, if there will be more and more traders that are trying to short this market, at some point market will rally, will liquidate even those for those who are trying to short this market. So that's why I'm still thinking that we could see some bounce, and that there can be some stops, big levels around 100,000 or above 90,000 from those that are short, and this will definitely be a very important level on the next potential recovery. Now looking at Ripple, this one didn't went far. Still we are tracking this potential triangle ABCDE that is an incomplete structure. So if we stay in this range, and if we'll be able then in a few weeks, maybe already in a week or two, count all needed subwaves here, then we will start calling for potential break to the upside. But for now, that's not really the case yet. So there is an option, valid option for a triangle, or potentially even deeper wave 4 if suddenly this triangle will unfold in a subwave B rather than wave 4. Okay. Now someone is asking for commodities. Basically, I'm keeping an eye on commodities, but if you want to look at commodities, you should be more specific, or if you are our member, maybe you can ask in our chat room, because occasionally we cover some of them, but not on a daily basis, because that's not part of our services yet. But generally, if you want to look at commodities, I think that commodities have room of more weakness. If we take a look on commodity index, I'm covering this one because I've been watching it before. Okay, no, that's not the real one. Just a second. Was here. Okay, so on commodity index for Goldman Sachs, you can see that basically we are here in a triangle, so possibly there will be falling prices going forward. I also see a consolidation in this one, Bloomberg commodity index as well. So overall, I just think that there is room for more weakness on this whole sector, and we know that this has a lot to do with energy prices, specifically in crude oil. So on crude oil, as I said earlier, we are looking for a push to the downside this year, and maybe this will be perfectly matching with whole commodity sectors as well. Okay, traders, that's basically it for today. If you enjoyed this analysis, this webinar, please make sure to subscribe to our channel. Please press a like, leave us a comment below this video if you will watch this a bit later, or visit us at wavetraders.com. You can check our services there. We also have a trial available for new clients. Traders, good luck this week, and we'll catch you with some fresh updates on the X, or hopefully I see you in our members section or in our chat room. Bye.